I will be taking up Unit 8 of the subject Stock Market Operations. Under this unit, there are 4 subsections. The first section is how to earn part-time from stock market. The second section covers how to retire as Crorepati. The third section covers how to make money from gold. And the fourth section covers how to make money from real estate. So now we proceed with the first section. In first section, we will study how to earn part-time from stock market. Intraday trading. So in intraday trading, the trading happens only in the day and the trade closes by end of the session. For example, the market closes by 3:30, so the trades close by 3:10. There are different rules for trading in intraday. The first one is trade in shares that have high volume. The term volume refers to the number of shares that passes on from one hand to the other in a day. Since the position has to be closed before the trading hour ends, the liquidity of the stock is what the possibility of profit depends on. Next rule. Leave behind your greed and your fears. Factors like greed and fear affect the decisions traders make most often. Therefore, it is best if we can keep these psychological factors away or in check when you are making trading decisions. Rule 3. Keep your entry and exit points fixed. Before you place the buy order, always determine the entry point and the price target of the stock. Price target is the price at which it is valued fairly, after taking into consideration its history and projected earnings. If the stock is running below its target price, that is a good time to invest in it, since you will make a profit when the stock reaches its target price once again or exceeds it. Therefore, setting the target price is highly important. Rule number 4. Limit your loss by using a stop-loss order. A stop-loss order is an order designed to limit the loss an investor has. You can cut down your losses by making use of a stop-loss, so you should make use of this strategy frequently. A stop-loss order feature is present in every trading account, so one should know how to use it. Rule number 5. Follow the trend. When you are taking part in intraday trading, following the trend is the safest bet in ensuring profit. How likely is it that trend reversals would happen within the span of one day? Unless there is a news around or any crisis happen, making trade decisions based on the possible reversal of trends might result in profits from time to time, but in most cases they will not. How to retire as Crorepati is the second section of this unit. However, in order to retire early and as a Crorepati, youngsters need a disciplined approach. Following are some of the tips that a millennial entering their professional life should consider to build an impressive corpus. First, create a budget. Knowing how much money you make, how much money you spend, and how much money you have available for savings is the first step in making any investment. Therefore, track your expenditures to learn about your typical spending patterns and costs. Create a budget by listing all necessary expenses such as rent, transportation, food, etc. As close as you can, follow this spending plan. Money is actually related to the psychology. Therefore, if you are spendthrift or if you are a miser in spending money, all of these impact your budget and your saving capacities. Second, create a plan and stick to it. Planning and execution are two crucial components of producing money. This is now simple to achieve with the aid of a mobile app where one may specify the objectives, the sum of money to be invested, and the method for achieving the objectives. Of course, one must make well-informed selections based on research and make the appropriate investments. Therefore, planning is highly important. And in planning, how much money is to be allocated to where is important. Third, establish life goals. Everyone has various financial objectives. While saving up the initial $10 million is a noble goal, you also need to consider what other objectives you need to accomplish. Establish long-term objectives for retirement as well as other things like buying a home or a car or getting married or starting your own business. A short-term objective can be maybe going on a vacation or maybe buying a jewelry, right? Then determine what the 10 million are and how they relate to your broader objectives. Are you saving for retirement with real estate, other assets like gold, equities, investment, or a combination of multiple other things? When you map out your goals, keep these things in mind. Remember, the demands and objectives may alter over time and you must be adaptable to make these changes into account. So I suggest divide your money into different types of account. The one can be spending account, other can be emergency account, third can be family account where all the expenses of family comes, fourth can be dream account, anything that you're saving for your upcoming dream or a dream vacation. Next, be intelligent and thrifty. As the proverbial saying goes, money saved is money earned. Being thrifty can go a long way toward helping save. Thrifty means be miserly in spending money. Thus exercise caution when indulging and be wise about where you spend. Next, start early and invest regularly. The earlier you begin investing, the more time you offer your money to develop, allowing you to move faster toward your goals, and managing risks in this way is also extremely doable. For instance, if you put aside ₹20,000 each month in an equity SIP with a 15% CAGR or growth rate, it would take you little more than 13 years to amass ₹1 crores. On the other hand, if you keep saving 20,000 a month, you will need a CAGR of at least 24% to get the same profits in 10 years. Diversify your holdings. Younger people tend to have higher risk appetite, or they are not reckless risk. The time to explore new options with better potential long-term rewards is now. It takes time, talent, and thorough research to allocate money among different asset classes in order to make profit. The last section of this unit is how to make money from, not last, students, it is second last. It is how to make money from gold. Why invest in gold? Gold is equivalent to money. Our ancestors used gold as a legal tender for a long time. Even after various other forms of currency emerged, gold remained store value for all other countries. Even today, countries keep gold in the reserve as a cover against economic distress and hyperinflation. Gold can never be zero. Gold has been in existence for over 3000 years now. However, not once did this metal become zero. Despite facing so many uncertainties in prices, the value of gold always remained above all assets, making it one of the most reliable assets. Third, it acts as inflation hedge. When inflation rises, the value of currencies goes down. However, the value of gold has always gone up. Take for example, the last decade, the value of gold has quadrupled. This proves that in the long run, the value of gold will always go up and give better returns than a savings instrument and beats inflation. Next is liquidity. Gold is the most liquid investment. This is because it is universally accepted by anyone in the world. Be it a jeweler, a pawn shop, or an online dealer, all accept gold and give cash against it. Moreover, it can be carried easily in your pocket. The process of selling gold is also quite easy, and you don't have to wait for days to get money. Any person buying gold from you will give you cash immediately. This is not the case with any other asset. Investing in gold doesn't need specialized skills. Investing in gold is very straightforward. Gold doesn't require special skills unlike stocks, mutual funds, and other financial assets. You don't have to do market research or regularly monitor your investment. Acts as a savior in times of distress. Gold can act as a hedge against market volatility. Moreover, in times of crisis, you can take a loan against your gold or sell it to finance an emergency expense. Portfolio diversification. Gold is an excellent diversification tool. This is because it has a negative correlation with most asset classes. This means that when the market is in a free fall, gold can protect the value of the portfolio. Hence, to reduce the downside risk of your portfolio, you can add gold to it. Wealth creating asset. In the long term, gold has given very high returns and hence can be a very good investment. The value of 10 grams of gold in 2000 was 4400 and today it is rupees 59,890. That's a 1261% return in 23 years. This means that on average the value of gold has increased 12% every year for the last 23 years. The last section of this unit is how to make money from real estate. There are generally 4 different ways to make money in real estate. First, increase a property's value, generate regular income through a property, buy and hold residential real estate, participate in investments that don't require you to buy property. First, increase in the property's value. Appreciation is when a property grows in value. You might purchase a property for 4 lakh and over the course of 10 years, it appreciates to value of 5 lakh. Sell the property and you'll have profit of $1 lakh. Reasons can be location, development, improvements, inflation in property value. Next, regular income. You will earn a one-time profit when you sell an appreciated property, but many real estate investors use their investment properties to generate a steady cash flow. You can generate regular income through residential properties, commercial properties, and raw land. Next, residential real estate income. Residential properties offer a variety of ways to make money. Whether you want to generate monthly income or one-time revenue, different options can suit your needs. The best residential strategy often depends on your preferred level of involvement, though They all require a certain level of research to be successful. Here are just few different ways to break into residential real estate. First, buy and hold. You can buy a property and hold it until it appreciates, or you could rent it out to the tenants. A fix and flip investment. In this, when you purchase a rundown or low valued property, over a short period, you renovate the property to increase its value and then you sell it for a profit. Vacation rentals. Vacation rentals are more popular than ever, thanks to websites like Airbnb. These properties can be tremendously lucrative investments even when you've accounted for cleaning costs and website commissions. However, cleaning costs are a huge cost in vacation rentals. Therefore, one should go for cleaning services before going for this option. Alternative real estate income. Here are some of the ways you can make money in real estate as a lender. First, real estate investment trust. In a real estate investment trust, the owner of multiple commercial properties sells shares to investors. If you buy shares, you will be entitled to dividends generated by the profits from each property. It's a great investment option if you don't have a lot of capital to invest. Mortgage investment corporations. Mortgage investment corporations are similar to REITs, but they hold entire mortgages. You will get paid interest that's generated from rental payments at each property. Hard money lending. As a hard money lender, you can provide short-term loans to other investors and profit through interest. Typically, hard money loans are given to investors who are unable to qualify for traditional financing or who need quick access to the cash. For these reasons, hard money lenders could generate substantial returns. Real estate investment groups. Real estate investment groups are private groups of investors with their own unique structuring. These are typically suitable for only seasoned investors. How to make money in real estate for beginners. Some real estate investments like fix and flips and commercial properties are too complicated for beginning investment. So what are the best investments for those who are just getting started in real estate? Here are 6 best ways for beginners to make money in real estate. First, invest in single family homes. Multi-family homes can generate higher returns, but they also require more capital to buy and the transactions are complicated. Single-family homes, on the other hand, are far more cost-effective and easier to manage. They also appreciate faster. House hacking. Consider renting out rooms in your home to tenants and collecting rent from them. You can use the rent to help pay your mortgage or save for a second home property. Next, invest in turnkey properties. A turnkey property is real estate that a company owns. These companies typically manage an inventory of fix and flip properties that are sold to buyers. Unlike traditional fix and flips, turnkey properties are less risky and you don't have to worry about completing your renovations under a strict budget and time frame. The renovations are done for you. Turnkey properties are also easier to finance and can be purchased with a small down payment. Next, rent out properties on Airbnb. A property located in a desirable location for travelers can be turned into a vacation rental. Airbnb is the most popular website for listing vacation rentals and it does a good job of vetting prospective renters and ensuring you get paid. Next, manage real estate properties. There is a high demand for property management companies. Many real estate investors don't have time to manage multiple investment properties, and they are more than willing to pay someone else to do it for them. Lend to investors. If you do have a lot of capital to spend, you can finance a mortgage for real estate investors. As a private lender, you can find prospective clients on a peer-to-peer lending platform, or you can create your own website. Before you agree to lend money to a real estate investor, you will have to calculate your potential returns and ensure that the investments will be profitable for you. You will typically earn about 6 to 15% returns. These loans are highly risky, but your loan will be secured by the mortgage. Still, this may not be a good investment for you if you are concerned about liquidity. If you have less capital to spend, you could always go for REITs that we have already discussed. So students, we have come to the end of Unit 8 also. Thank you for patient listening.